In this three-part video series, you're going to learn about the Relative Strength Index Indicator, or the RSI. All right, let's get into it. All right, this is the Relative Strength Index Indicator, or the RSI, and this is what it looks like at the bottom of the screen here. And just really quick, I always get asked what platform I use for trading and charting. For both, I use TradingView. I really like it. I switched from MT4 to TradingView because it's so much better, and you can use it on any platform that you can get a browser on. So if you want to get started with the free version of TradingView, you can go to tradingheroes.com/TradingView, and it won't cost you anything to try out the RSI and see how it works. If you do choose to upgrade, that is my affiliate link, so I do get a small commission, but I only recommend products that I use and love. Now, I won't get into too much of how to trade with it just yet because I want to explain the formula. But in future videos, I'll give you exact trading strategies on how this can be traded. And then in the third video, I will show you the results of my backtesting with those trading strategies. So just for now, let's get the basic concepts out of the way and the formula of how it's calculated. So the basic concept behind the RSI is that it's an oscillator. It goes back and forth between 0 and 100. And it gives us an idea of how price is reacting based on previous price action. So we're looking for an instance where the RSI goes outside of this shaded area, and I'll explain what that is in a little bit. But once it goes outside of that area, you can be assured that price is at an extreme based on the previous price action. So as you can see here, it's gone outside of the shaded area, and that's because it's below the previous price action that you can see here. And this can give us a good indication of a place that we could trade where price could potentially reverse and go back into some sort of range. And as you know, the market trades in a range most of the time. So the RSI indicator can give you some good signals as to when price is going to reverse. So if your trading personality is a reversal trader, then this could be the indicator for you. Now that you understand the basics of it, let's take a look at the actual formula. I created this graphic here, and you can get it on my blog, tradingheroes.com. Just search for RSI Explained, and you can download this graphic to get the calculation. Now this is the primary formula for the RSI. And as you can see, there's this component RS, and that's a very important part of the RSI. So let's take a look at that first. So when we calculate, or when we set up the RSI, we set up periods, right? You want to set a look back period. So if we double tap on the RSI here, the length or the period in this case is 14, and that's the default setting on most trading platforms. So what it's basically doing is it's looking back 14 days and is giving you the relative strength of the current price compared to the previous 14 days. Now you can set this up with whatever look back period you want, 14, 20, 100, 200 days, whatever. It doesn't really matter as long as you can test the trading strategy with that setting and it works for you, right? If you use a smaller number, it'll obviously be more sensitive because it's only looking back at a few candles. If you use a larger number, it'll be less sensitive because it's looking back at more candles. But it just depends on what your goals are. If you're more of a short-term day trader, then you might want to use the shorter periods. If you're a longer-term trader, you might want to use longer periods. But again, this needs to be tested, and it's something that it can be personal to the trader. It can be very individual to the trader. So keep that in mind. All right, back to the formula. So the first graph point on the chart, the first RSI graph point on the chart is going to be calculated using this formula here. So if your look back period is 14 periods, then the first 14 periods won't have a graph point, RSI graph point, because it's still calculating, right? The 15th period, it'll have the RSI graph point, and this is how it's calculated. So you basically average the up periods over those 14 periods, and you divide that by the average of the down periods over those 14 periods. And an up period is simply a period where price closed above the open, right? Pretty simple. And the period could be any period. It depends on what chart you're using. It could be the daily chart, the 4-hour chart, 1-hour chart, whatever that single measure of time is going to be a period. All right, so once you get that RS, then you plug that RS into this formula, and that gives you the RSI data point. And this formula simply turns the RS into a oscillator. So it just oscillates between 0 and 100, and that makes it much easier to understand the price action or the price relative strength for anything that you're using. So even if you're trading stocks, you're trading futures, you're trading Forex, the RSI setting is going to be always between 0 and 100. Now, if you just use the RS setting, you would have something different because there are different decimal points. There are different ways of expressing the price value in different markets. So that's why the RSI indicator is handy, because it can be used across all markets. Okay, so after the first RSI graph point, all subsequent graph points are going to be calculated by this formula. So the numerator is going to be the previous up average of the n-1 periods. So what does that mean? So when you, if you use the default of 14 periods, then you're going to take the average of the first 13 periods, and then you're going to multiply that by 13, and then you're going to add the average at the 14th data point. So what this is doing basically is it's putting more weight on the current average or the current data point of the RSI or the RS. And that gives the current price action just a little bit more weight, so it makes it a little bit more important compared to the historical average. And then you're going to take all of this, right? You're going to have the average of the 13 data points multiplied by 13, and you're going to add the current average on the 14th data point, and you're going to divide that all by n. And this is only for the periods that have closed up, right, above the open. Then you do the same thing for the periods that close below, or the down periods, and you would take that RS number and you would plug it into this formula again, and that's how you get the next RSI values. Okay, now let's take a look at the settings. You already know about the length setting. That gives you the look back period, how many periods you're going to look back, right? But you can also set the trigger points. So the default settings for the upper band here is the default setting is 70. The lower band's default setting is 30, and that's how most people use it. However, if you wanted to get a little bit more, you want to filter out a lot of false settings, at least that's the theory, you could up this to 80, and you could lower this to 20, and that would ensure that you're looking at more extreme price action on the RSI. And that's basically what it is. TradingView does a nice job of shading the inside of the indicator here. Some charting platforms do that, some don't, but just know that it doesn't really matter if it's shaded or not. It's just a matter of if RSI goes above or below these trigger points. And you can set up alerts on TradingView, or I have a MT4 plugin on my site that will send you an alert when price or RSI hits these trigger points. And that can be an easy way to step away from the computer and still get RSI alerts. And you can, once you get the alert, you can just go back to the computer and check it on your screen and see if it's a potential trade setup. Okay, so that's how the RSI works basically. Now let's get into a couple of misconceptions with the RSI. So some people will tell you, or some sites will say that the longer the RSI period you use, or the higher the number, the default is 14. But if they say that 250 is a more accurate number, that's not true. Like I mentioned before, the setting is just a personal preference, and it depends on how you trade and your trading strategy. So just because you're using a 250 period RSI, that is not necessarily more accurate than a 14 period. It's just a matter of what your goals are and what your trading style is. Another misconception about the RSI is that some people say that it's a lagging indicator and therefore it can never work. And that's not true. I've found that most indicators will work if you use them in a certain way. and you need to test a strategy. You need to figure out if there is positive expectancy with the strategy. But I know professional traders who do use the RSI, and it's all about learning about how it works, testing it, and figuring out what's the best way to take advantage of the information that it's giving you. So that's also a common misconception. And finally, let's get into the strengths and weaknesses of the RSI. There are three basic strengths to the RSI. First, since most markets trade in a range, the RSI can be a good way to possibly predict when price is going to reverse and go back into the range. Secondly, the RSI is widely available. You can get it on almost any trading and charting platform, and the calculation is easy to understand. On the flip side, there are also three weaknesses with the RSI. First, and most importantly, the RSI does not work well in a trending market. If you continue to use the RSI in a trending market, you will go broke. So you need to identify when a market is trending and when it is ranging, and when you should be using the RSI and when you shouldn't be using it. Secondly, like with any other indicator, it doesn't work all of the time. The overbought and oversold signals are not guarantees that you will make money. Which brings me to the third point, which is you need to take the time to practice this, you need to test it, and you need to master the RSI indicator and how it's used. All right, that's my explanation of how the RSI indicator is calculated and how it works. In the next video, I'll give you the two major ways that the indicator is used to trade, and I'll give you complete trading plans for each of the major trading strategies. Then in the third video, I'll show you my backtesting results for each of the trading plans so you can get an idea of how well each one works. And I'll also show you how to get started so you can test this for yourself. Remember, never trust anyone on the internet. Never trust that a trading strategy is going to work for you, because it's very individual to your personality, your risk management, and how you want to trade. So the best thing to do is to learn a few strategies, but also learn the process of how to test the strategies to make sure that it's something that's a good fit for you. And I'll show you that in the third video. All right, thanks for watching, and I'll see you in the next video.